Good, right. Well, welcome everybody. Good to see you all on this call. There's obviously been a lot happening over the last few weeks, and certainly this week around finance. A lot of questions that have been going around the WhatsApp group, and so hopefully we're here to help with a few of these. We've got kindly on the call Simon's joined us from Nat West. And we've got Dan from ASC Financial Business and Graham from Productivity Finance. So these guys are on hand to make sure that you answer as many questions as you can. There will be some that will probably go into too much detail. We may not be able to answer all of those, but we'll do our best as we go. Before we start, what I wanted to just do is I suppose set a few little ground rules for this call, but I think for the next few months as well. We have a little thing in Action Coach called being above the line. And it's really sort of an understanding that there's no point in going into blame, excuses and denial with this. We are where we are. And we've got to actually cope with this. If you are on the call, if you could just switch your mics to mute, that would be great, just so we don't have any background noise coming through. So we do want to take this ownership and provide that accountability. It's very easy to sit here and blame the banks, blame the government, make excuses or just ignore it. Now, hopefully, there's nobody on this call that is in the denial phase. Otherwise, you wouldn't be on the call itself. So, when we are asking questions, please, if we can keep it from an above the line point of view, that'll be great. These guys have given up their time to be on the call, not to be abused. There's a lot of questions that we'll get through. The other thing that, there is a lot of fear about now around finance, some of that fear comes from the understanding of how the system works, how the normal process works. So, we want to really go back to, if we were asking for finance, before all of this, a lot of the rules are going to be exactly the same, okay? So the danger is our fears, overrule, our emotions, and then we start making wrong decisions, and, we don't get the best out of it. The other key thing is that our reaction to this event is going to dictate our outcome. Okay, we have to react and above the line, but we've got to understand this event has happened to us, it's happened to all the people on this call, and it's happened pretty much globally. I think as a country, we are in a fortunate position where we are gaining help and gaining support. Okay, it may not be the best out there, but there is something, and it's really about us knowing what we can do to make the best out of it. So that's my little bit of sort of scene setting. So a lot of us are talking about the CBIL scheme. What is it? So I've put a few things up there, guys. If you want to read that, I'm not going to go through in detail about it. If we can get the chat box open, let me just get the chat in here. So if you do have a question, please, do use the chat box, and then we'll go through there. And then if we've got a bit of time, I'll open it up. And if anyone's got something else they want to say, that'll be brilliant. So excellent. So Sue, just if you use a chat box, that's the easiest way for us to all see what's going on. So we'll probably start. If I start with Simon, who's from Nat West. Is there anything that you want to add to your understanding of your bank? So you can only talk from your bank, but I'm assuming it does relate to a lot of other people's banks as well. So, what?
Yeah. I'm happy to give you a bit of insight as to what we've seen over the last sort of week or so. Perhaps what we've heard from others that we've spoken to that potentially bank elsewhere, but sort of be careful. I don't know the full details of the scheme, and then potentially some sort of changes that are coming down the track as well. So in terms of the CBIL scheme. I think I suppose it's fair to say normally when a bank launches a product, it takes about 6 months to do so. Probably more in some cases. I think this was probably done in under 6 days. So it probably was a little bit slow at the start in terms of it was launched on the Monday, and probably by the Monday afternoon we just about got the briefing papers and the process map to start sort of reading it ourselves, to then start communicating it then to sort of clients thereafter. But it's been pretty much all hands on deck since, really. So it's been 12 to 14-hour days most days.
Yep.
And for lots of people, it's been wanting to talk to somebody about how it works. Now, the fundamental part of it, which perhaps isn't explained that clearly in any of the literature you might see, or from perhaps the Chancellor standing on the podium at number 10, is fundamentally the way that we've been asked to assess it is as if it is any other normal banking loan. So when it comes to us, we have to assess affordability of that loan. So we've had a number of, I look after a lot of tech companies as well. So I've got some customers that are pre-revenue or pre-profit. So it's really hard to demonstrate the affordability for those businesses. The affordability aspect that we're looking at is we are looking at what was the business, what position was the business in before all this happened. So we're looking at 2019 stats or management accounts, and then using those figures to say, well, if the business was viable at this point in time, it could afford a loan of X. Therefore, with a bit of decent headwind, we can give them that loan to get through that period of time. And when they get back, or when we all get out of this other side, they'll be back up to that strength, and therefore they can demonstrate they can afford that loan back on those numbers that we looked at before. But I suppose the bit that's not necessarily publicised is how we have to, or we're being asked to analyse it. We haven't been given any dispensation from the government to change our banking rules or lend to businesses that otherwise wouldn't be able to afford it. So that's probably the biggest bit that we have to work with. And then I suppose with that in mind as well, it is a full application side. So we still have to do all the due diligence that we would normally do on a banking loan. We've still got to do. So it's almost a case of building a really good business plan, probably a better business plan that you might have done before all this, because you do need to cover off what is going to happen. What steps have you taken? What levers can you pull to try and make sure that we all make this through this safely? So those are probably sort of two standout key things, really.
And yeah, we've got a mixture of people.
Is that useful?
Sort of on this, yeah, no, that's really good. So we're going to have a mix of people on the call here. Some that will have had finance before. Some possibly have never thought they ever needed finance. That this is their first sort of venture into that. So when you say a normal application, and to put a business plan together, what are you expecting in that business plan to give the best chance of success?
Okay, I suppose it's all relative for the individual business, I suppose, and the size of the business and what the actual ask is. So obviously the facility does run from a loan of £5,000 up to a loan of £5 million. So you kind of got to balance the amount of information in the application to, I suppose, what the actual ask is and how stretching the ask is. But in terms of what I would normally include within a business plan, if someone was coming to me fresh, or we are writing an application fresh with somebody, what we're looking to do is demonstrate what the business does, who the management team are, who are the key people within there, what their experience is, why they are, I suppose, up to the job of getting through this, because it's not going to be easy for everybody. Yep. We're going to look at what the key risks of the business are, maybe who their suppliers are and who their customers are, and therefore whilst the business that we're looking at today is in a really good shape, what about their customers? Are there going to be any bad debts because of the sectors? If their business is solely reliant upon supplying the hospitality trade, there's going to be sort of bigger challenges perhaps there than maybe some of my IT clients. So my tech clients that do unified comms are doing really well at the moment because everyone's working from home. So it's really trying to balance those risks out. And then throughout that, we're looking then at, go on.
So if we have been, if we've got a business that's been hit pretty hard with this, let's say a restaurant or a hotel that's just had to close down, you would take that into account, the fact that they are closed, but you'd want to see their plan of how they're going to get back up to speed?
Yeah, sure. Yeah, so it's a case of what they've done so far. So it's taken into consideration. So we need to detail steps that they've done, levers they've pulled that the government have shared so far. So likes of furloughing staff or deferring VAT, and building all that into sort of the cash flow forecast and the forecasted budgets going forward. So it's trying to pull information, the steps they have done, to then to take it to a look forward position. So how we're going to sort of get out of that. But yeah, I mean, there's no bit of paper that says if you're in the hospitality industry, you need to do a bigger business plan. But obviously, probably if you are in the industry, you are probably thinking about it more so than somebody that sells laptops.
Yeah. And one of the questions here from Rich has been, 29, so at the end of 2019 probably wasn't their best profit. They've actually done really well first quarter of 2020. I'm assuming that if that is the case, put as much positive information into that pack as you possibly can. 2019 is just a guide to you guys.
Yeah. So I think it's fair to say. So I mean, we're bankers. We like stat accounts, right? But if in that situation, if 2019 or the back end of 2019 wasn't good, but Q1 was good in 2020, I'm definitely trying to pull that out. Nobody foresaw this coming. So probably people did make investment decisions in 2019 or make decisions in 2019 that may have affected their accounts that they might not do going forward. So really clarifying what they are so that we can easily say, well, there's a clear add back there of X, which then makes the business sort of viable going forward, or the affordability, demonstrates the affordability going forward is key. But yeah, so it's not a be or end all if 2019 wasn't great, because the other thing I think we've got to recognise as well, again, not through anyone necessarily on this call, but we had a few false starts at Brexit last year. So 2019 wasn't good for a number of businesses across the board anyway. So that has got to be recognised in some respects. When I was doing a report this morning, they were in the same situation. 2019 wasn't their best year. They still made a profit, but I was kind of looking at what their normalised profit was over the last 3 years, and sort of using that as my sort of benchmark.
Okay, so we've got Dan and Graham on as well. So Graham, would you add anything to that? You are on. I can take you off mute for a second. Would you add anything to that when you're looking out in, because Graham and Dan look at the whole of the market, so they're not just looking at a particular bank, they're going to other lenders as well. How would you add sort of more to that, Graham?
Yeah, no, I'd agree exactly with Simon. You've got to look at the business, how it's structured, what happened and Simon's talking about trends. So yes, I agree wholeheartedly. Certain businesses last year with Brexit had false starts. And I understand fully what you're saying about CapEx last year. You might not have done certain things and retained funds for this year. Obviously through BNI, that's why I met Kevin. I did a sort of Campari and Ice kind of thing, because I've worked for Nat West years ago, and that, and Simon's smiling. Every business plan, wherever you start, and it doesn't matter what bank, you've got your characterability, your means, what do you do, how do you do it, purpose, is it legal, is it going forward, is it okay, is there a market for it, your amount, is it right, repayment, how am I going to repay it? I mean, clearly at the moment, all the tills in the country are shut. So, that is not an indication. But going forward, when will the tills open? What sector are you in? And for argument's sake, if you are a seasonal business, for instance, like a hotel we were discussing earlier, their tourist season is now April to October. If we're still locked down come the end of August, you've lost the whole year, frankly. That is going to be a big ask for any business. Alternatively, you might be selling, Christmas bonnets or something. So the summer is not that hard to get over, and your sales are all through the Christmas period. So I think you've got to highlight in your business plan, and Dan, myself, Simon, we're experts in this, and that's what we pitch to the bank to say that this is where the business is, that's where its strengths are, and this is where we're going to make money going forward, irrespective of this period we're in at the moment.
Yeah.
Does that kind of make sense for everyone?
Yeah, that's good. Dan, do you want to add anything on that point? I think Dan on the call. Sure.
Okay, I can unmute myself. Sorry.
Oh, well done, Dan. Sorry, you're a long way down the list.
I mean,
Nothing personal.
It's been a long week. Yeah, I think firstly, props to Simon for coming on. It's obviously the banks have had a bit of a bashing this week in terms of their approach. So thanks for coming on, Simon. And as a broker, it's interesting to listen to what you've got to say. And obviously, you're speaking to banks all day, every day, anyway. But what I would add is just in terms of the forecasting. I've spoken to businesses from both ends of the spectrum. Those who are desperate for cash but were profitable pre-virus, and those who are sitting relatively pretty right now and seeing this as an opportunity to sort of boost their reserves. So it's obviously a case of counselling business owners who are in that camp that that's not really what this is for. It's really to help businesses that really do need the cash to cover overheads, suppliers, keep important staff on, whatever the case may be. It's not there as a business growth exercise or anything like that. So it's just sort of educating business owners in that respect. And then with regards to the forecasting, I've spoken to a lot of business owners that are really just plucking figures out of thin air in terms of what they think they might need. And so although banks aren't necessarily requesting detailed forecasts or anything like that, I think it is an important exercise to do so that you've got a good grasp of your numbers and exactly, when's the cash going to run out, if it hasn't already run out, and what are you going to get, are you going to need to get through this? Obviously, we don't know when this is all going to be over, so it's best guess, and no one's expecting anyone to be completely accurate, but it's just anything, the more robust the information that I, as a broker, am providing to lenders on behalf of my client, then the more likely there's going to be a positive outcome and a speedy outcome as well.
Oh, no, I'd be sort of almost looking at this as, let's say, this is a startup business plan, isn't it, Simon? It's sort of saying, right, this is the first day of your business going forwards. What is what is your plan? How much do you need to get you through that first year? Because in a business, you expect to make a loss in the first year, break even the second year, profit third year. So, what is your business plan to get you back from that loss-making situation, which is 2020, in towards break even and profit as soon as possible? And
I think you're right.
This isn't a grant. This isn't a handout. It's going to come willy-nilly. There's got to be some thought and backing, to your claim.
Yeah, that's right. So it's really important to have that forecast and that cash flow forecast to show what that peak is. It's basically a requirement of the scheme. I think that we've been told we need to have that, and it's prudent to have that to be able to for your own peace of mind, if anything else, really. But even for a lot of my clients, I look after a number of large clients. A lot of them don't do cash flows. Their business just runs relatively smoothly, and they've never really had to do a bit of a disaster recovery plan in terms of, well, hang on a minute, if we don't have money coming through the door, what are our fixed overheads, or what can we scale back on, and what are our true fixed overheads? So they've never had to actually plan that before. So they've obviously planned that down, and they've doing the Symbil's application, I suppose, for me and for them, it's probably been a bit of an exercise, a bit of a new exercise for them in many respects to find out really what they need and can they get through that. It's fair to say as well that whilst the scheme's there certainly to be used and to help our clients, I think someone just touched on it there. It is a loan to be paid. It's not a grant. So I've had some customers come to me and actually say that, what do I really want to be taking this? Because it's debt. It's debt. I mean, I've got some business owners that are in their 60s, and back into last year we were talking about retirement and exit and selling the business, and now we're sort of weighing up, do they want to take on more debt for a period of potentially up to 6 years? So it's not something to jump into. Like, the terms are relatively attractive. So I think from our perspective, I think there's some changes today coming down for some of the lenders, but I think terms can be seen as quite attractive, but it is still debt that's to be paid.
Yeah, I think that's very much the case. It's, if you treat it as like starting a new business, do you want to be in this business for the next 5 years to repay all of this? It's it's a dangerous thing just to plug the gap for the next 3 months without that longer term view of the next 1, 2, 3, 5 years. Some business I think will come out of this very quickly and be able to repay it relatively quickly. Others, it's going to take, it could take the full 5 years to pay this debt off. And you're right. Do you want to go through that? But more importantly, if you do want to go through it, you've got to have a plan to make it work.
I've just seen a question from Anna come in there around arrangement fees. So certainly again, I can only talk about our approach to it, but I think this is a common approach across all banks. So in terms of if it's a CBILS loan, there's no arrangement fees to pay, and there's no interest to pay in the first year of the loan. There's a few more coming in as well. Yeah, so there's no interest and arrangement fees to pay in the first year. For us, as a bank, we're not charging them. I think some banks are claiming them back, or the government's paying them, I suppose, for some banks.
Right.
For us as well, so from a Nat West perspective, there's a capital payment holiday for the first year. I think HSBC are doing the same.
Yeah.
And some other banks may have it as an offer, but ours is kind of built into that. So effectively, it's nothing to pay in the first year, and then the repayments and interest kick in from years 2 to whatever term you take over. And
the interest, not because I know some people have taken the mortgage holidays where the interest rolls up onto the capital. This is the interest is just not payable for that first year, isn't it?
Yeah, there's no interest charged at all. No.
Yeah.
As an aside to the CBILS, I would just say if you do have current facilities with your bank or any other lenders, hire purchase or asset financing, then if you haven't done already, it's worth speaking to them around capital repayment holidays. We turn those around fairly quickly, and it's I think, an easy ask for a lender to help with that, and that could help with your cash flow, and then going back a step into your budgets and what like as well.
Yeah, but if you take a holiday, the interest will roll up on that one, so the interest will still be payable.
Oh yes, on existing.
But cash flow wise, it would help you through the next few months on that. So cool. We've got a few more questions coming in here. So that was Anna's one. There are some grants available. Yes, so the grants, generally the grants are coming through the local councils. They had all the money sent to them, I believe, last Friday. So, go on your local council's site and find the way to apply for the grants through that particular medium. So there's more on the WhatsApp group for that one. Beneficial to consolidate existing payments with the CBILS. Not sure.
So basically, there's a condition from the government that. I will put a caveat to everything I'm saying today. That this is as of first thing this morning. There are some changes that are coming through today. So in terms of the scheme currently, as I know it, the CBILS loan can't be used to refinance existing debt.
Yeah.
So you can't use it to repay old debt or refinance old debt. If you were considering that, or it would help, again, speaking to your lender to perhaps try and do things simultaneously, maybe a good option.
So I know I've got somebody had asked me a while back was if they're sitting on, let's say, £100,000 of cash, and they've got £100,000 of debt currently. And with the view that before this was going to happen, they were thinking of paying off that debt early. Now that they're sort of looking at it and thinking, well, actually, we need more than 100,000 to get through the next 6 months or so. What's the best way? Is it to use the 100,000 to pay off the old debt and then start again and then get the new debt, or? Because obviously it's going to be slightly better terms now because of the fall in interest rates, etc.
Yeah, I don't know how that would be seen necessarily. I mean, in the spirit of the scheme, it can't be used to refinance old debt. So if you were looking to repay 100,000, then take out 200,000, then it could be seen as you're sort of quasi refinancing it. So I think it would all depend on the circumstances, really. But I think if you were considering, if I was in that position, for example, I think if you were considering repaying debt, then I would be thinking twice. This is not advice to whoever that is, but I would be thinking twice about repaying it, because liquidity could be key, and this could go on for longer. So planning out, potentially applying for a loan to planning out what's needed and taking out a loan, or speaking to sort of Graham or one of the Dan to see if they can help with some planning and get some sort of flow liquidity might be the option for that aspect.
Cool. Okay. Are there any penalties for early repayment? I believe there isn't. I think I've got it.
No, not on a CBILS loan.
So if you get it because you want to cover that gap, and then you find yourself in a profitable situation, you can repay it by the end of the year, or in a year, 2 years. There's no early repayment, so I think that would be a good thing. Take it out for longer than you think, but with a view that you can pay it early would be the best rate. Typical interest rates, are we looking at market rate here? I know it's very subjective, but any ideas?
Well, okay. So this is, I almost sort of touched on this a moment ago. So as of yesterday, say, there were some lenders, I don't think any of the mainstream lenders necessarily, that were almost taking advantage of this.
Yeah.
And we saw some interest rates quoted of up to 30%. Which effectively, when this is a board, almost a fully, an 80% secured facility, is ridiculous. So from Nat West's stance, is what we've said is we will be charging our customers the same interest rate as what they would have got if they borrowed this 3-6 months ago. So we're not, even though there is a perceived increased risk, we're not loading a premium on top of it for this facility. The bank pays the government for the guarantee, to acquire the guarantee off of them. But we're not passing that cost on to the customer or anything like that. So there isn't. There's a long answer to could have been a very short answer, really. But it should be effective. Whatever you would have got normally, it's a personalised rate. It's not a fixed rate on any particular business sector or anything like that.
Yeah. And Dan and Graham, are you seeing the same thing happening in your world there?
Yeah, what I was going to say is, I think from Simon's perspective, obviously, the high street banks, tier one, they are going to be the cheapest option every time, full stop, whatever. It's when a client either is turned aside by them for either the full amount or a partial amount that we kind of get involved potentially and go to another version of CBILS, yes? And there are, up to 40 across the market. For which we have access to. So it depends on your profile, depends essentially on where we can place it. And Dan and I will obviously always try and place it at the finest rates, kind of working down the market ladder to get up to the worst rates towards the bottom, so to speak. That said and done, there are certain lenders who are now no longer able, because of the change in the scheme. So Newable, for instance, had to pull out this morning because they're essentially that they always have to lend with a PG. So now the scheme is without a PG, they can't lend. So all of the people have been applied, granted, and even up to kind of almost sanction there have been shoved elsewhere, basically. I was talking to Barclays, and sorry, Simon, you can swear. They're saying that with the change, because they were taking PGs, now they're not taking PGs, so they have to go back to all of their people that they either declined and put onto CBIL, because their understanding is you have to offer the bank standard products first, maybe cheaper than CBILS or different criteria. So they're going to underwrite all the loans they've done with CBILS in case they could have done it on a normal basis, and therefore the pricing might change. They're going to write all the people they've declined and rewrite under a different criteria in case, et cetera, et cetera. So pricing, who knows, frankly. I'm not sitting on a fence to get a splinter here. It is as variable as it ever was or will be. And there will be some people, I was chatting about asset finance or asset refinance. rates. If you want cash really quickly, the likes of Funding Circle used to be, a year's worth of accounts and a sort of a wet postage stamp, and you get it through. These days, it's 4 years accounts trading, etc., etc. So it comes back to how well it's packaged, their appetite, and then the rate, is on the back of that. I'm looking at a bridge that today that I started off 3 weeks ago at 0.67, and now they're talking at 125. So, the rate has doubled in 3 weeks with the same lender.
I think we are. It is going to be all over the place. I've just got my loan through, and I got 3.9% fixed over 5 years. So I was more than happy with that. So I think you've got to, if you are applying for this, take on. You don't have to accept it, do you? I mean, they'll give you an offer. This is why likes of Graham and Dan, they're worth their weight in gold, because they will tell you whether this is a good rate, a not so good rate, and they will have options to go elsewhere. And I think that the key to this, and correct me if I'm wrong, guys, is if I came to you, Simon, for Nat West for a civils loan, and you perhaps couldn't do all of what I wanted or even turn me down, I could still then approach other civil lenders to actually see if I could get finance that way.
Yeah, 100%. Yeah, and I definitely recommend sort of, if that's the case, using a broker or an advisor to sort of help place that, and perhaps it may well be the application needed a bit of shaping or a bit of advice as well, which those guys would be best placed to do that. But yeah, if you're declined by one lender under civils, doesn't mean you can't apply elsewhere. The only thing I would say is that I've had so many conversations with businesses that I've known for years that bank elsewhere. At the moment, we are prioritising our existing customers, rightly so in many respects. So all our focus is going on looking after our customers before maybe sort of trying to help those that have got access to the scheme with their existing lenders. So the capacity for maybe mainstream banks to take on additional volumes may be limited. But again, the brokers and advisors are the best place to sort of look at where the best funder may well be within the timescales that's required.
Yeah, Simon, just to add to that, all of the high street banks are adopting the same policy at the moment. They're dealing with their own clients first and foremost. So I've just seen Julian's added a question in chat about should you approach your own bank in the first instance, and the answer is yeah, absolutely.
It'll be the easiest and potentially the quickest, although nothing's going to be super fast. But and also they'll know more about your history and that relationship already. And I think this is one of the key things of all, even before this, I've always said, look, you build your relationship with your bank manager, in the good times, so that when times like this, you can pick up a phone and talk to somebody. So it's I know staffing has been sort of cut, and the RMs all over the place have to work pretty hard, but it's still worth building those relationships because they do come good in the end. Matt's just put there on Barclays. Matt, I don't know, Barclays, the interesting thing was I put the request to be on this call out to every single high street lender, or the main ones, and only Simon from Nat West. I actually had two responses. One from Santander to say they couldn't make it for other commitments, but I had no response back from any other banks. So read into that what you will. So interested. I don't know if you can see that wording, guys.
Yeah, I'm just looking at the question. There's a few that we might have skipped past. We've done an interest rate in terms of should you contact your Nat West. I think Jeff asked, should you contact the Nat West relationship manager direct? I said yes, 100%.
So 428 from Matt Crabb. Barclays just emailed stating pre-approved loan value. One of the provisional limits update on a daily basis, go up and down. Lending subject to application. Security may be required. I think, for me, Matt, that to me just sounds like a standard email that's come out and probably hasn't been updated with what's happened really sort of last night, this morning. And I think Paul asked what was the change that happened this morning. Simon, do you want to just sort of say what that was?
Yeah, well, so there were a couple of changes. Well, there's a few changes this morning. And again, some of them may just be us, but I think they're more generic. So the government have now said that that no lender is to take personal guarantees for loans of up to 250,000 at all. Whilst we were already taking that stance, there were some others that weren't, so which is a really good move, I think, for a lot of people. They've also. So again, I don't know if it's just our stance. I don't think it is, but where before we were looking at if we could lend under traditional terms, i.e. there was enough security there, they own their property or whatever, we were asked by the government to do that first before we used the benefits of the scheme. We're being told that we can lend using existing security, but the business isn't disadvantaged. They still get the benefits from the scheme, i.e. the capital repayment holiday, the interest-free period, and the fee-free period. So that's cool. The other big change this morning, really.
Yeah, cool. Good. There's a few more comments come through. Richard's just put on there, Barclays has turned us down because their criteria is looking to have total loan repayments covered by the last year's profit. We don't do that because we're a growth business. I think that it would seem that it's worth going back to Barclays. Would you agree, Graham? Oh, hang on. You've just muted yourself, Graham. Graham, you've just muted yourself. That's better. There you go.
Sorry, yeah. With the changes that I was speaking, to Barclays this afternoon, that is an obvious first call. Existing banker, existing relationship, schemes changed. They're looking into it, but let's be honest. And I think Simon's nailed it here. There are fewer bank managers than there were 10 years ago when the EFG, which is this kind of based on first appeared, so to speak. So just logistically, fewer bank managers, more people equals backlog. And that's just reality of life. If you can get to the front of the queue, get there. And, if you're a Barclays person, please, and been turned aside, please go back and say, scheme's changed. Can you revisit my application?
Yeah, cool. So on the amount that we can actually claim, that we can actually put, under CBIL, but generally within in borrowing, they mentioned that it was a cap of 25% of turnover and double the payroll. Is that still as you see it, Simon?
If I'm honest, I haven't seen that stat anywhere.
Right.
So I think as far as what we're really working on is, first and foremost, is how much does the business need? And I don't think that necessarily falls into any type of ratio or metric. It's what is the need, and then benchmarking that need against the affordability of the business. I.e., could the business have afforded to borrow this before? Or, okay, I know they're not going to afford it over the next 12 or 24 months, perhaps, because of what's going on as they scale back up again. But if they could afford it before, and as the Chancellor was saying, if they had a good solid business before, then those are the businesses that we want to try and support to sort of leapfrog across the next 12, 24 months to get back to where they were really. But I don't think there's a ratio, or I haven't seen one that puts a cap on any amount for any other reason really.
Okay.
But other lenders may have that. Sorry.
Yeah, can I just butt in? I was under the impression it was 2 times salary or 25% turnover. That was kind of the metrics. And I've just seen a couple of chat room things, and from Claire saying on working on 6 months cash flow and forecast and thing. I would suggest you've got to be sort of at least 12 to 18 months. Reason being that we don't know how long this is going to last, and if you've got a year's free facilities, it's well, not free but non-payable. You've got to be looking at the end of that how you're going to repay it as well. So we've got sort of guidelines that guys in our network have kind of said to us as brokers to look at. So it's 3 years accounts and 2 years cash flow in forecasts for the future. Because going back to what Simon said, the more information you can give, the more likely you're going to get a yes.
Yeah, and I think, it comes back to, really knowing your numbers. I think, I can't remember who said it was up above that, if you're in a growth business, so i.e. 2019's profits were reasonably low, but you're on an upwards path of, yes, this is a growth business, it can survive and thrive through the next 12 months or so. You've got to be able to show that in your numbers, and you've got to back that up with as much information as you can to give the banks and the lenders that confidence that you can do that. I mean, my only challenge with that is, I'm assuming this isn't seed capital, is it? This is not about a different form of finance that's going to help you as in a new business startup point of view. You've got to go back. If I was going to be lent the money 6 months ago, then I'll be lent it now. If I wasn't going to be lent the money back then, the danger is you're probably not going to be lent that now. So,
and then that's where potentially, again, speaking to some brokers and looking at alternative funders perhaps, or looking at sort of equity or other sort of fundraisers could be appropriate for if you are in a growth business or a pre-profit or pre-revenue business.
Yeah. And so, you've got to go back to, if you've got accountants, you go back to your accountants, you've got to get your budgets, your cash flows, if you want some support from me, you've got to have those. I've spent the last 2 weeks predominantly doing cash flows and budgets with clients. That's it. Looking what if analysis, is it going to be, Jeff has said 1, 3, 6. Yeah, we do every single version. If we get back up and running in 1 month, 2 months, 3 months, 9 months, what if, and then you come up with what you think is, acceptable, and then that's the one that you take to the bank. And that's why you need people like Graham and Dan to look at this and give you a reality check before actually it goes to those guys. What if I did come to you with a proposition? Let's say I wanted £200,000, Simon, and I thought I had the making of that, and you ran it through and you turned me down.
Mm-hmm.
Would you sort of turn me down flat, or would you say, well, I can't do 200,000, I can do 100,000?
Okay, so it's a slightly difficult one to answer. So I'll give you an example, a real life situation for me and one of my customers, and then I might give you the official answer to it. No, I'll give you the official one first. The official answer, I think, if you apply for a number and that application is put forward and a bank can't do it, then officially, therefore, a declined message needs to be conveyed, and therefore a declined process which should go forward, which includes a letter to them, a letter to the customer that explains why they can do it, and signpost them to alternative lenders, perhaps. So I think that's the official process. Now, in reality, we as the main top 4 or 5 banks are relationship-led banks, so we will have a relationship with our customers, and we won't necessarily allow an application to come in with something that's not realistic. So I did have one for the full £5 million, but they make £250,000 a year. So there's a slight imbalance on affordability. They can't afford over the next 6 years to repay £5 million off of £250,000 profit a year. So again, we're working through I'm working for the cash flows with them to try and say, well, what other levers can we pull? What can be deferred to try and get it to a figure that is affordable, that will go through an underwriting process. So the reality bit is having that discussion with them, and/or using sort of the brokers. So a discussion with your bank, and/or using brokers and advisors. Speaking to Kevin around, okay, what do you think the art of the possible is here? On the basis that, again, we're still using bank lending parameters, so there is a margin of safety that we need on top of profit. It's not if you made £50,000 profit last year and your loan repayments are £50,000 next year after the interest-free and capital payment-free holiday comes through. One-to-one doesn't necessarily work. You need a bit more fat in it to make it work. So speaking to sort of the Grahams, the Dans, and the Kevins of the world to try and sense check the ratios there would be key as well, as well as speaking to your existing bank.
Yeah, I think we had a thing from Simon there sort of about loan cover and profits. it's not as it stands right now. We accept that you're not going to be able to repay your loans right now, but in 12 months' time, when we come out of this, or looking back to 2019, have you got a business model that creates enough profits to service a debt of that size going forward? So again, you've got to look at this like a startup. If I had that money, I've got to prove, if I haven't done it in the past, I've got to prove more so going forwards that will come as a result of it. If you can prove it back in 2019, then that's going to help you, because they'll just say, well, look, if it just takes a year to get back to that level, you could actually repay that debt. So I think that is important. So convertible loans, I think that's a bit technical on this one.
I don't think civils will come anywhere near it. It won't touch convertible loans.
No. I think, look, this is what it is. It's there to help us through a hole, with a view to hopefully being repaid reasonably quickly afterwards. So if I've got reserves now, do I need to account for this in my lending requirements? So again, it's a little bit like my question before. If I've got £100,000 stashed away to help the growth of the business, so I've been doing really well. I'm reinvesting back in the business. I've managed to squirrel some money away. How does that impact my ability to borrow for the next 12 months?
I think the best way to answer that, I suppose it depends on when those growth plans kick in reality. So if that growth plan is in 5 years' time, I suppose there's probably a fair challenge to say, well, we'll deal with that in 5 years' time when you get there, and the reserves now should be used to get the business through the pending period. But if you had a plan that for your business that you needed to reinvest into the business within the next 6 months, again, building that into your forecast, I don't think that. I think you'd have a fair challenge to say that that's legitimate. You shouldn't put the business on hold or at jeopardy for the sake of this. And if you, again, going back to if you could afford it part before, you could afford it and you need some help getting through from a working capital perspective, or whatever it may well be, using the civils process makes sense. And then you having the working capital there, which is effectively your reserves, to then continue driving your business forward.
Yeah. Cool. Good. So I've just switched slides. This was what I took as the latest update from this morning about the PGs. I think we've covered most of what's in there. The last point I think was relevant. Banks still have discretion over what interest rates, so it will depend on a little bit of their view of risk within the industry sector and what you're doing, but Chancellor has requested they keep it modest. Because I think it was those stories of profiteering out of this, paying ridiculously high rates and not giving people the option. So hopefully, again, that's why going to brokers like Dan and Graham is important, because they understand what's going on beyond that one person you go to, so they'll give you a bit of a reality check around this. I suppose I was going to sort of cover a little bit on PGs, because there have been some questions in the past. If I took a PG out, if I had to sign a PG, if I had to go to another lender and sign a PG, and something happened to the business, and obviously couldn't repay its debt, is there anything that you guys want to just tell people about the reality of having a PG? Because a lot of people come to me, I don't want to do a PG, I don't want to do a PG, and I say, well, look, if you believe in your business model and you believe you're going to do this, then what's the problem? But certainly where we are now with a really uncertain situation, I can see why people would be sort of more uncomfortable actually going into a PG arrangement.
It's a totally fair point, I think, Kevin. So my previous stance on personal guarantees was, I think within within reason. They were just, and it for more than anything, it helped. If something went wrong, it kept the directors and shareholders buy in to try and help the bank or try and help whoever needed to get out of the situation. I think this is a different situation in some respects, and I think this is where us as a bank, we took a slightly different stance on day one and didn't look to take them, because would I be comfortable signing one in this situation when you're doing everything you can do, but this is not necessarily, this is not a bad business decision that somebody's taken. It's not on you that this is happening, and it's somewhat out of everyone's control, and nobody really knows how it's going to play out. So would I feel comfortable signing at the moment? Probably not. But they are still around. You may still have some, so you might have some business owners that still have personal guarantees for some previous lending, which in theory are still would still be in place and still in situ. So in terms of what they are, they are sort of legal documents. They are worth sort of considering the implications of them before signing them, I suppose.
And that just to follow that up, when I was with the bank and as a broker, the advice always before you put your signature on that PG is get independent legal advice, so that you're absolutely clear on what the implications are for you should the worst happen.
Yeah, I think it is that, and look, just because the government are backing this and providing 80%, it's still 20%, isn't it? Is down to the business to cover, and there will be other borrowings. So this, again, I can't sort of get this across strong enough that this is not a grant, it's not a handout. This is a commercial debt that you're taking on behalf of your business because you believe the business is sustainable in the long run. And you've got to really understand your business model. You've got to look at the economy now, where it's going to be in the next 6-9 months. And unfortunately, some businesses just aren't going to survive this. They really, I'm one of the most optimistic people that you'll come to meet. But the reality from this is, Boris said, 20% of businesses will fail. Businesses fail even in good times. This is going to sort of really shake the tree. So you've got to make sure you're in the strongest position possible. Look at your numbers, work with your accountant, use people like, Dan and Graham, use me, get that support, because making these decisions rashly, can be very, very dangerous. Just jump in, borrowing money, getting money out without a reality check, might leave you in a very weak position, in sort of 12 months or even 2 years' time. So we are sort of running sort of to the end, but as we started a bit late because of my failure at the start, I just put a few things here about the application process. So, this is what I was sort of, a few sort of questions to ask. We've said, I still think the first place of call should be your existing bank. Find out what their system is. I'm sure, Simon, if anyone gets stuck with Nat West, if they want to just contact you and just see if you can just help a little bit. You've certainly been very kind in helping a couple of my clients through this. I do have connections to other bank managers, so please, if you do get stuck, just ping me an email and I'll see what I can do. I can't promise anything. You're not going to get you to the top of the queue. I don't know these guys that well, but sometimes it gets blocked, it gets lost in the system, so it's good to do that. Information to prepare, we've talked about business plans, cash flows, budgets, really get your numbers together. Anything you guys, if I was going to come to any of you with wanting finance, what would you really want to see from me to speed this process up, to not keep telling me to go back?
Evan, I think I might have, in the last 3 or 4 days, something from our kind of head office saying to us, this is the best ways and this is what you need to package a case in the best means. For a few emails, and if I can find it, I'll get it up on the website.
Yeah, if you can get it on the chat, that'll be brilliant. Just like a 10 things you need to do, just so people can go through that. Yeah.
Best practice thing. So yeah.
Anything specific, Dan? What's any areas that you've seen over the last few months that you said, I wish you'd actually done this, it would just save so much time?
Yeah, I think, as we've already covered off, because the banks are absolutely overwhelmed at the moment with new lending applications, and I'm sure Simon's probably dreaming about it, to be honest, but it's the more information and the more robust the information we can provide, or either you can provide direct to your lender or we can provide on your behalf, the better. So I'm asking my clients for last 3 years accounts minimum, assuming they've been trading for 3 years, up-to-date profit and loss account as well, cash flow forecast for at least the next 6 months, if not longer, and also a full understanding of what actions businesses have already taken. So, what's happening with staff members? Have they accessed any grant income? Are they deferring any HMRC payments, for example? Because all of that would need to be factored in. And I think lenders need to know that as well, so they can see the true position. So the more accurate and the more thorough and the more robust that information is, the quicker we can help you, or the quicker the lender can respond if you're going to do it yourself.
Yeah. Yeah. No, and the one thing that I put my hand up, we put our application in, and we asked for a certain amount, and our numbers on the information we submitted was a different amount, and it's come back and said, well, we've noticed this disparity. Which number do you want? So make sure your numbers tie up. don't have the numbers do one thing and ask for another bit. Make sure it all works out. So, but it's easy to do. So, and anything to watch out for? Anything that sort of glaring mistakes that you've seen, Simon, that people should just be careful for?
So it's different across the board. So because if you're depending on if you've got a relationship, some people might not have a relationship manager, so it might be more of an automated process, which in some respects, for once, might work in your favour if you haven't got a manual intervention. But I suppose making sure that if you are going to provide information that's right, as you said, Kevin, knowing what you're actually asking for. I have had one customer that's sort of sent me some management accounts and said, "Can you apply for us?" and hadn't told me how much they want or any support. So we're not mind readers.
The bank to do more work than they're actually doing.
Yeah, I mean, it's got to be a proper application. Make sure you can. The affordability is really the biggest thing to make sure it adds up and you can cover up, because that is the biggest part of the scheme. Really, is just the affordability. And probably, I would say, try and get on this sooner rather than later. I mean, I've had a few applications as I've been working 12, 14-hour days, but I haven't got the full scale of my applications in yet from my clients. So right. I know that this is going to spike probably next week. And so if it is really important and time critical, your banks, tell your bank manager that. Whilst I'm sure it is important to everyone, is it critical? And we'll work on those critical requests first for our clients. But if it is important, then try and get on it sooner rather than later, ensuring that there's no mistakes in there type thing.
Yeah.
Simon, what's if a client doesn't have an RM like yourself, obviously you only know about Nat West, and it goes into the central pot. Do you know what the sort of typical response time scales are for that?
Yeah. So I know that our team have made over the last week or so have made 95,000 outbound calls on these facilities. So our central teams are rammed. It's like you wouldn't believe. So I honestly couldn't give you a turnaround time. I don't know if some of you may know Aaron Britton. Aaron's sort of local in the market, but he's helping sort of not man the phones, but helping with some of the prioritisation from our side. So call times, you're probably going to be on hold if you're trying to speak to any bank, probably using the normal number. So I suggest not calling them unless you absolutely have to. If it's just a routine inquiry, you can do something online or send an email. Then I'd do that to try and keep the lines cool. But I think we've seen queue times up to a couple of hours. So once you get through, I think you then get you get into the system, and it's probably a couple of weeks turnaround from start to finish, I would think. But it is really busy.
Yeah, so certainly you're really now thinking if you need money to cover the April pay run, because don't forget, even if you furloughed your staff, you're still obliged to pay them on the 30th of April. We don't know when that portal is going to be up and running, so I'm saying everyone, assume you're going to get the money by the end of May. So you are going to have to cover that end of month pay run. And is that I'll put the last one point there as time frame is, if I put the application in next week, what sort of time frame before I actually get access to the funds?
Okay, so I don't want to set anyone up to fail, including myself here. However, I had all the information from a customer on Monday morning. I finally managed to actually sit down and look at it properly on Wednesday night. It's been approved now. Okay, so it can be done, but that's because I've got 3 full applications on my desk. As soon as I get to 15, that speed is not going to be there. But again, that's because it's me looking at it. I'm looking at this thing at 8 o'clock at night, and I'm writing a report. It will all depend on capacity, and this customer did a really good application. They had everything that I asked for, everything was needed, and it read well. So it made my job really easy when I'm sort of basically copying and pasting key parts of it out to put into the application to justify their case. If I had to go back and ask for further information, or I did actually speak to her on the phone that evening, but if I had to go back and ask for more information, or they had to readjust it, it's going to delay things. So quality of information is key. Getting it in promptly is key. I would kind of think, we have scaled up and streamlined this down to make it as easy and quick as possible from our side. But it is still going to take time. So I would probably allow a week or 2 for it to go through the system if everything's right. But even if something's approved, we still have to go through a documentation process, which again is being streamlined. I think that's up and working today, so I should be able to have documents out over the weekend. But banks will be quite forgiving and quite supportive around. So for this customer, it's been approved. If they don't need it necessarily on Monday, but if on Monday morning they had to send a payment out, but we hadn't done the documentation or the loan hadn't been drawn down, we're going to help them out. So banks will be as supportive as they can. You just need to speak to them and explain the situation and explain what the risk is or how the risk is mitigated, I suppose.
And if I did have that April payroll to run and the loan wasn't in place yet, so I had heard that you're accepting temporary overdraft breaches.
Yeah. So I think a lot of banks have said that they're not going to charge fees and stuff. So if there's a slight breach in an overdraft, I think you're going to be all right for the next couple of months. Obviously, every bank's different. In terms of, the furlough one's something really quite interesting. So we put all our resource at standing up and being able to deliver the loan product as quickly as possible for customers. What we are now doing is we're now looking at how we put some sort of emergency overdraft system in place, specifically centered around bridging those furlough receipts. So that's being worked on at the moment. It will continue to be worked on over the weekend. I would imagine that will some sort of products around those furlough bridging overdrafts is probably going to sort of come out in the next week or so. Obviously, ideally before April payroll. I think that would obviously be the stop date, but we're going to want to give people as much comfort as possible. So I guess that we're working on that, as I imagine everyone is at the moment.
Yeah. So if I wasn't going to go for a loan, but I could pay my payroll, but that would take me into overdraft before I got the money back, then they're definitely, again, speak to the bank, tell them that's going to happen sooner rather than later, so they can at least make a note on your account that you have actually contacted them.
Yeah. It's all relative in terms of what the numbers look like and how long it's likely to be. But yeah, communication would definitely be key in that respect.
Yeah, fabulous. Okay, so I think we've answered sort of the main reasons you're going to get a no. Lack of business plan, really sort of lack of understanding of where your business is and serviceability. Anything else on sort of other options and how you guys can help, Graham, Dan?
I mean, there's the truth is that at the moment the commercial lending space is fluid. So over and above the high street banks, who are obviously understandably focusing all of their resources at the moment on CBILs, the likes of the peer-to-peer lenders, so Funding Circle, for example, as Graham mentioned earlier, they've really tightened up their criteria in the last 24 hours. But there are still other options available in terms of bridging against property, for example, which can provide some cash for a business. But again, the likes of Graham and myself can sort of look at your requirements in detail and understand but your existing circumstances and what you're hoping to achieve to make sure that whatever's put in place for you is the right finance. So I would stop short of going through a long list of options now. It would be more a question of looking at an individual business's bespoke needs and taking it from there.
Cool. Yeah. Graham, anything to add?
Yeah, I'll just echo that rather than just repeating it, if that's okay with everyone.
It's always good to go in second sometimes, isn't it? Well prepared. So good. I don't see any other questions on the chat. If anybody's wants to just quickly come in with anything that hasn't been answered or they can't type, then that will be great. Otherwise, I just want to say thank you very much to Simon and Graham and Dan for giving up their time today. I know you guys are just so busy, and really appreciate that from me and everyone that's on the call. If you do need Dan and Graham, they are on the WhatsApp group. You can contact them directly there. If you've got access, their emails there, and please do utilize these guys. They are very knowledgeable in the marketplace, and I'm sure they'll just give you a few pointers in the short term, but will help you now and in the future as well.
Could I ask one question quickly? Yeah. One thing that obviously none of us know is how long this is going to go on for. Is there any provision within the CBILs to apply for an addition, basically an extension to your loan, if it extends further than you anticipate at this stage?
So extension, I don't think so, because I think that's more of there'd be a law about drawing down the loan and redrawing against it. However, there isn't a limit on the number of CBILS loans, for example. So if you applied for £100,000 today, and in this went on for a bit longer, in 3 months' time, you need an extra £20,000 because we could see the end of it, and you need that top up to go for whatever reason. Then at the moment, there's nothing to say that you can't do that. And I would imagine that if it does go on slightly longer, then I would have thought the Chancellor may make some changes or make some adjustments to it to try and make it even more attractive. I would imagine the scheme rules still would apply in there. You can only assume the scheme rules will apply in the same guys. So if, for example, if you could afford £100,000 today and that's all you could afford, you took it out and it went on longer, I don't know how we would then justify lending you more. But it would be assessed at that moment in time when you reapply for a separate or top-up loan or whatever it may be. Does that help?
Yes, thank you. That was very helpful. Thanks.
Cool. And I just think, guys, that we don't know. There's an element, because there's no fees on this. If you do get all that pack done, ask for more than you need. Look at the pessimistic view that we're going to be in this for the next 9 months. Really look at make all the cost savings that you can in every area. But if you're going to ask for something, ask for enough to keep you going for that 9 months. Don't think of this as 3 months and that'll be fine. Look at it subject to your serviceability, but look at it from that point. And if we get into the end of the year and you've got money and you can repay it, then repay it. I think that's the best way as we are, rather than going back in 6 months asking for more. because, again, the ability for the business to then pay is, might be more questionable at that stage. We just don't.
Yeah, possibly. I think the only thing I'd say on that, I totally agree with your sentiment, Kevin. I think the thing we have to be careful of is that we have to evidence what the limit that we're asking for. So
yeah,
I wouldn't necessarily, if you needed 20,000 to get by over the next couple of months, and you put an application in for 70, and there was 50,000 buffer, I don't know if that would get approved. But if you showed in your cash flow that you needed 70,
yeah,
then that because there are potentially some spokes or potentially some risks that you need to pay, then that would be, I suppose, reasonable, and you just got to, I suppose, evidence and justify the limit you're asking for is relevant, I suppose.
I mean, I suppose I'm coming from the fact that a lot of people are saying, look, we'll be back up and running in May, and then I'll be at full capacity in June.
Yeah, and you'll need working capital to get out at the back end of it as well, won't you? So
yeah, I'm totally reasonable. Assume this will take a bit of time to come back up to your normal levels of trading and cover that gap. Think about pessimistically. Do you plan to cover that? If we get out of this early and we get back up to speed quickly, fantastic. That's a great place, and you can pay off the loan even quicker.
Indeed.
Cool. Well, look, thank you very much. As I said, Dan and Graham are there. If you need a bit of help and support, how to do a cash flow budget, what should be in it, I'm available between 9 and 10, 5 and 6 every day next week. Please just message me. I'll book you in for a Zoom call, and just to give you a bit of support, because I know it's, having done this most of my life, how complicated and confusing it can be. So I'll give you as much help as I can. Go to your accountants, get them on board, get them helping you as well. And hopefully next week, if everyone's got their finance in place and done all of this, we did HR last week, we've done finance this week. Next week, I'm going to turn the focus more to looking forwards into, what is the marketing we can be doing in a crisis. We're not just sitting on our asses for the next 3 weeks doing nothing. We need to be creating our marketing plans and looking at ways to actually improve our marketing coming out the other side. So I'll be posting more on that on the WhatsApp group later, and I'll be bringing in some really good people to give us their viewpoints on what we need to do in that. So thank you all very much, guys. Enjoy your weekend. So it looks like we've got a bit of sunshine and warm weather to enjoy. So we can actually sit in the garden and enjoy our little bit of self-isolation time. So again, thanks a lot, and we'll see you again soon. Bye for now.
Thanks, Kevin.
Thanks, Kevin.
Cheers, everyone.
Thank you very much.
Thank you.
Thank you very much.